Hey everybody, it's Cindy Bishop with Cindy Bishop Worldwide, and today we have Gary Garrison, my good friend and wonderful Gary, independent life
Health, life, and
and
annuities.
thank you. I missed a couple of those. I want to make sure I got it. Gary is a wealth of information, and he's also, of course, one of our continuing education instructors. But I just love how he lays this out for you guys. It's going to help you so much. I don't think anybody else really does training like this. So here we go. Take it away, Gary.
Thank you, Cindy, and welcome everybody to today's webinar. This happens to be probably one of the most requested topics that I receive. I cover a number of financial related areas. As Cindy has mentioned, I think most of you know, I do quite a few things. I'm probably relevant to you guys more than anything else initially is that I've certainly been an agent, a real estate agent, and a broker for since 2009, so just 12 plus years now. But the money side's always been very important to me, and it's something that's because of the benefit to me, I've enjoyed helping others with it as well. So I do focus primarily on the financial side of things because there's a lot of issues there for us, and Social Security is a big part of that. And so my goals are always to find a better way to eliminate money worries, protect against the unexpected, rebuild and grow retirement money, be able to retire, maintain the desired lifestyle. That's certainly a concern for folks. How is life going to look like for them when they do retire? They're going to be able to live like they do now, or they're going to have to make some significant changes. And for many folks, it's also be able to leave a legacy to be proud of. All of this is for a better life, hence the name Financial Glee, for my company. And today we're going to be talking about Social Security and the overall Social Security puzzle, which, as you can see here, when you're thinking about your finances, when you're thinking about not just retirement, but certainly retirement's a big component of it. Money be able to live on and be able to use and grow and prosper today. Excuse me. It's a big giant jigsaw puzzle of a piggy bank moving forward. And Social Security is a very, very big piece in all of that. So we're going to go through that for you guys today. Some of the most asked questions I receive is, will it be there for me, and how do I maximize my benefits? The short answer for the first question is yes. The Social Security is got protections in place so that it will not go away, at least for the foreseeable future. The more complicated question or longer question version is, will it be the same level of benefit for me? And so right now, Social Security is projected to run out of money in 2035, which is kind of scary because we're talking 14 years from now. And that's if Congress doesn't do anything to change that, which they may not. Many folks are predicting that they won't, at least not until perhaps right up to the expiration time. And if it does run out of funds, again, as I mentioned, Social Security will still be there. It's just that the benefits may not be the same. And that's important because if you're relying on Social Security for your retirement income, and you could be receiving 20% or 30% less or more, that could be devastating. How do I maximize my benefits? It's got any number of answers for it. The key component there is just proper planning. And we'll go through some of that, some of the different scenarios today as we go through this. So what I'll cover, Social Security basics and changes. There have been a number of changes made over the years that impact many of us that are still alive today with with what we can expect to receive as benefits and what we should be doing as far as planning goes. When and how to claim Social Security and taxes. Many people don't realize that Social Security is actually taxable and actually plays a part in determining the taxable amount. So we'll talk about that, and we'll just discuss Medicare premiums briefly. The main topic really is Social Security today, but Medicare, once you start receiving Social Security, is a requirement. So we'll talk about that just real briefly at the end as well. So major changes in Social Security over time. We're looking at in 1965 is when they added Medicare. And then in 1975, they added cost of living adjustment, which is referred to as COLA. And this has been invaluable because cost of living keeps going up. And if your Social Security benefit doesn't go up with it, then certainly the impact to you is going to be even greater. Eventually, you can see it reach a point at some point where it won't even be worthwhile at all to have. Now, the cost of living doesn't necessarily mean it will completely match all of your financial expenses that have gone up, but they do, excuse me, a pretty decent job. Then in 1983, they recognized that people were living longer and were working later. So in 1983, they added a gradual increase in retirement age. That's going to be based on when you were born. So if you were born, before 1960, your retirement age can be anywhere between 1965 and 65 years of age and late and 66 years. If you're born 1960 or later, and you're looking at 67 as your current retirement age. So they made that adjustment because of our longevity and the fact that it continues to increase traditionally, although it took a little bit of a hit last year, very minor. 2000 because of COVID. So in 2015, they discontinued the file and suspend and restricted applications capabilities, and this was afforded to folks originally that would allow you to file and request you file for your Social Security benefit, but suspend your benefit, but at the same time allow your spouse to receive their spousal benefit. So in 2015, they've suspended or discontinued that as part of the new rule program. It's still available for those folks. We'll talk about it briefly a little bit later based on your age. So if you fall in that right category, it can still be available to you. But for most of us, it's no longer available. And then in 2018, they made some additional adjustments to the COLA and increased maximum benefits back in 2018. So where does that leave us today? So as I mentioned, before, we talked about file and suspension and the fact that was changed for that and restricted filing. So if you were born before January 2nd, 1954, you do have restricted filing rights capabilities still. If you have both earned and spousal benefits, you can file a restricted application. So that will allow you to file for Social Security, but suspend receiving your benefits, but still allow the spouse to receive spousal benefits. And you have the option to be able to switch. So you can be filed and suspend, and you can switch back to it. And if you're a spouse, you can receive spousal benefits. And if you have your own, you can always switch later too. So your spouse must collect, not be suspending, and meet the January 2nd, 1954 age test. So there are different, again, rules with this, but if you fall before that January 2nd, 1954 category, you still do have the restricted filing capabilities, and know that the rules did not affect survivor benefits. They're covered under a different set of guidelines. Now, if you were born on or after January 2nd, 1954, you're subject to the new rules, as I mentioned, that went into effect in 83. You may not file restricted applications any longer, and all filings are considered deemed filings. Probably should put that in double quotes, make it a little bit more obvious. So deemed filing, so when you go to file for your benefits, it's assuming that you want your full benefits now, no longer allowing restrictions. The suspension is still allowed, but if you suspend, you're suspending all of your benefits. And if you collect, then all of the benefits are being paid. So this will have an effect overall on your strategy for collecting your Social Security. And again, survivor benefits were not affected. Now, married couples, they weren't all born before 1954. So if you find that perhaps you fall in this category where one is before and the other is after, to just recognize that this is an interesting scenario, but it does have rules for it. It can be a matter of the age difference as to what would be beneficial and possible, what won't. Oftentimes, it'll just come down to who has a higher benefit as being a major factor. But honestly, there are just too many variations for there to be a simplistic formula. So it really does depend on your specific situation, and a little bit of investigation can help reveal exactly what would work best for you. So when and how to claim. So what we're referring to really is the primary insurance amounts. This is what folks refer to as their Social Security benefits. PIA is derived from a worker's lifetime earnings record. Typically, there's a scale that Social Security Administration uses, but traditionally for full Social Security benefits, they require at least 40 quarters of employment and paying into the Social Security program. So it's essentially 10 years. So 10 years of employment would get you full access to your Social Security benefits. Less than that, then basically they've had those years with zeros, and they'll run the math until you'll receive a smaller benefit. It is a benefit a person would receive if they begin or to elect receiving benefits at full retirement age. And then talk about what full retirement age is, because that is important. You can't actually begin receiving your Social Security benefit before what they refer to as your FRA, and that's your what they believe to be or have identified as your retirement age. So in this particular case here, in this little capture, your retirement benefit estimate, great source for this information is the Social Security Administration website. In fact, many of the mailings that they used to send out periodically that would say, hey, here's kind of where we feel your Social Security benefit will be at the time you go and take your or elect to take your Social Security. They've stopped sending those out in paper for most folks. Their preference being that you go to the website. Now, the website does require you initially to provide some information that's supposed to match with theirs for them to let you in. And if you're one of the lucky few, it'll work the first time and you'll be able to get into your account. More often than not, I find that my clients need to actually contact the Social Security Administration, get the issue worked out before they can get access to their account. But it's a excuse me, a great resource, and it continues to be updated as you continue to pay into the Social Security program. So you can see where the arrow is pointing to 2449. If you wait to start your benefits at full retirement age, and for this particular example, it's 67 years and 0 months, your benefit will be about 2449. So there's a link, go down to ssa.gov, my statement. And again, great resource for you. Now, I had mentioned you can receive Social Security before your full retirement age. There's some considerations. Will you work after 62 and before whatever your full retirement age is? How healthy are you? Do you anticipate living a long time, happily, healthily? And are you married, or were you previously married? So these are factors you'll want to seriously factor into your planning for receiving your Social Security benefit. It'll be interesting to note there's about a 76% difference between the option for receiving your Social Security benefit early and receiving the benefit at the maximum late period as well. So in this particular example, we're just looking at an individual at a retirement age. Their FRA is 66, and their estimated full monthly benefit, say $2,000. If they were to begin receiving their Social Security benefit at age 62, that would be reduced by 25%, and that's permanent. The moment you start receiving your benefit, that's a hard fixed number. It doesn't gradually go up outside of your COLA adjustments, simply because you're now getting closer to your retirement age. So whenever it is that you decide to make that election to receive your Social Security benefit, this is the income that you'll be looking at essentially for the rest of your life. So at 62, you're looking at a 25% hit, and then you'll notice that the graphs get a little bit smaller as you get older, 63, 64, 65. So the longer you wait, the less of a reduction you'll experience in that long-term benefit. Now, if you wait and pass it, you'll see, if you're able to wait beyond 66, 67, 68, 69, 70, you'll see there's a big difference. It will continue to grow. And at age 70, you're looking at a monthly benefit. It's about 32% higher than your full retirement benefit would be. So again, there are some things to take into consideration that we talked about on the previous slide. And a lot of this is simple math. The Social Security Administration uses the actuarial tables, I hate that word, to really figure out exactly what kind of a payout they'd be looking at. And if they're paying longer, then that's the reason for the reduction. So smaller benefit per month, but they're anticipating making more payments. If you wait longer, then they're able to pay more because they're anticipating making fewer payments. Now, when you're talking about survivors, some of the concerns involve or include inflation, cost of living adjustments, whether or not they do in fact cover satisfactorily at true cost of living, increases your Medicare premiums that are required, and the income tax bracket. And so why does all of this matter? Well, I mentioned the actuarial tables that are looked at today. The Social Security Administration looks at, say, a 66-year-old, healthy 66-year-old is having a longevity period of 83 years, and for male and for female, 86 years of age. So you can see where if they're providing payments 4 years earlier, an extra 48 payments, why they would be looking to reduce those monthly payments for you. And it's important because there's no guarantee that, and certainly we all hope and aspire to live as long as we possibly can. I know I'd love to see triple digits. I understand I've got to make some significant life changes to get my health where it needs to be in order to do that. But for a healthy male at age 65 today, they currently have a 50% chance of living beyond 88 and a 25% chance of living beyond 94. So you're looking at a huge potential impact on when you start receiving those monthly benefits. For a female healthy at age 65, there's a 50% chance of living beyond 90 and a 25% chance living beyond 96. And if it's a healthy couple at 65, there's a 50% chance of at least one of the couple living beyond 94 and a 25% chance of living beyond 99. So this plays into not just your Social Security benefit, but this also plays into some of the concerns folks have about outliving their retirement. So life expectancy and when is going to be a huge impact on your overall financial planning. And with Social Security being a part of that financial planning, you need to be very careful and make sure you're making the right decisions when you go to elect to take your benefit. So you can work at the same time while you are receiving benefits, but there are limits. So for 2021, for Social Security retirees, there's a maximum income allowable of $18,960. So this is between 62 and the year that you will reach your full retirement age. So that individual that would be turning 67, this would be between 62 and 67. For every $2 above this $18,960 that they earn, Social Security is going to withhold $1 of their Social Security benefit. Now, I say withhold because that money is still going to be part of your account. It's going to be something that they will use as part of their factoring, later, and they could potentially make adjustments after your full retirement age. But they will be reducing it for $1, for every $2 above that particular amount. And then between the January 1 of the year that you reach at full retirement age and your your birthday month, they'll change that to be just $1 of every $3 above $50,520 will be withheld. So if you have an early birthday, January, February, this may not be a big factor for you, that they'll withhold this information. But if you have a late birthday, October, November, December, and you're still very successful earning wise, for those of us in the real estate industry, you're still a big producer and your business is doing great, just know that they'll look to withhold money up until that birthday month. But then after you reach your full retirement age, then there won't be any additional withholdings, at least as far as your Social Security benefit goes. So it's like, it's interesting to see all of the different little factors that go into Social Security from a planning standpoint and why it's important. From a timing standpoint, there are benefits for spouses. The spousal benefit is based on 50% of the other spouses at primary insurance amounts for the Social Security benefit. And this is important for a number of reasons, especially if the spouse has had a limited number of years in employment because they were homemakers, caregivers, take care of the family, so they didn't have as many years of employment. So, excuse me, didn't really have an opportunity to grow their Social Security benefit overall. So there's an opportunity to capitalize on their spouse's benefit. So as a spouse or ex-spouse, they're entitled to benefits if spouse is entitled and have filed for their benefits. They are not entitled to a higher benefit. So it will come, Social Security Administration will review and say you're the one that's filing, looking to take advantage of your spouse's benefits. But if it turns out you actually have a higher benefit, then you wouldn't be entitled. You'd get the higher of the benefits. You file a restricted application if you qualify for spousal benefits. You're at least 62 years of age. If you do elect to take it before your full retirement age, then just like your Social Security benefit that we talked about on the previous slides, it will be discounted. So something to take into consideration. I mentioned on the previous slide, ex-spouses as well. Ex-spouse, for the most part, the benefit is essentially, it's the same as the spouse benefit, but there are some guidelines for qualifying. So if they were married, had to be married for at least 10 years, must be divorced for 2 years, and after that 2-year period, they can file an independent claim, and they must be unmarried when they make that claim. So ex-spouses also have opportunity to utilize the spousal benefit feature of the Social Security program. In that timeline chart, in 2015, as I mentioned, they had made some changes for restricted applications. So if you're divorced, so for divorcees, if you and your ex are born on or after January 1, 1954, the restricted application is available. But if you're born on or after, then the restricted application is no longer available, as we talked about earlier. All right, so survivor benefits. So when you're looking at Social Security and the spouse passes, sadly, they pass, it's not that the benefits themselves are lost forever. There's an opportunity for you, or your spouse to be able to take advantage of the benefits that they've earned and accrued over the years. So for survivors, unmarried children under the age of 18 may be eligible to receive survivor benefits. A widow or widower can also receive survival benefits, and there's a couple of categories here. If they're a custodial parent of a child under 16 that would be eligible for the benefits, or a disabled child, they could receive the spousal benefit itself. Spousal survivor benefits can begin as early as age 60. Now, if they're a custodial parent, it doesn't matter the age that they can be eligible for it. If you're collecting, the surviving spouse gets the larger benefit. So if you are eligible for your own benefit, you essentially would get the larger. You end up forfeiting the smaller benefit. So they don't allow you to collect both. what they will do is they will maximize your benefit to whatever the maximum would be for either yourself or your spouse. Typically, spousal benefits are about 50%, depending on the scenario, of whatever the spouse would be able to earn, and in some cases could be up to 100%. All right, Social Security and taxes. I had mentioned earlier, not everybody is aware the role that Social Security plays with calculating taxation and the fact that their Social Security benefit could be taxed. And if they are aware, they're not familiar with these charts and how easy it is to find yourself in that taxation category. So you'll see here, I've got two charts, the single filing on the left, married filing jointly on the right. And you'll see the first column on the left on both of those is provisional income. So provisional income is your adjusted gross income, including any tax exempt interest, plus 50% of whatever your Social Security benefit is. So if you're talking provisional income needs to be under $25,000 to have 0% of your benefit taxed, and you may be receiving $2,000 a month, like in that example earlier, it won't take long before you find yourself in that taxable category. So if you're receiving $24,000 and 50% of your Social Security benefit is included in your provisional income calculation, that's $12,000. So you're limited then to $13,000 and still be able to have none of your Social Security benefit taxed. Once you find yourself in that $25,000 to $34,000 range as a single filer, then you're looking at up to 50% of your Social Security would be taxable, and over 34,000 up to 85% would be taxable. And for married filing jointly, under 32,000 finds themselves in that 0% category, but it then changes quickly. 32 to 44,000 is up to 50%, and over 44,000 is up to 85%. Not a whole lot considering in our area, it's almost impossible to live on $44,000 or certainly $32,000 or less. So your planning is going to be critical, very important regarding protecting that Social Security benefit down the road. And so with your provisional income factors, your adjusted gross income, tax-free interest, and 50% at Social Security. Luckily, though, things like your Roth accounts and your cash value life insurance products, they do not count against your provisional income, which is why they are great assets to have for your overall retirement strategy, especially if you're looking to minimize your overall tax obligations and protecting your Social Security income. Now, what we've been talking about up until now has been really federal taxes. However, luckily, we're not one of them, but however, there are states that actually will tax Social Security benefits as well, and they're highlighted here in blue. So you'll see the DC, Maryland, and Virginia area, luckily, our state does not tax Social Security benefits. But if you know other folks that do, or if you were planning to move to some of these other areas, you will definitely want to do your research first and make sure you understand what potential state tax obligations you may have to plan for as well with your retirement planning. And as I mentioned, for the Medicare premiums, we'll just touch on this briefly. When you do elect to start, there are a couple of rules that come into play here. When you do start to elect to receive your Social Security benefits, your Medicare Plan A is automatically, it's a requirement. B, C, D are optional, but you do have to file for A, and then you do have monthly responsibilities. If you're earning $88,000 or less as an individual or married filing separate, if your joint return is $176,000 or less, your monthly payment would be $148.50. Now you'll notice in the caption, if your yearly income in 2019 was, here's what you'd expect to pay in 2021. And that's because there's about a 2-year lag between what you file with the IRS, what the Social Security Administration picks up and ends up factoring in as far as your Medicare premium. So it's kind of a sliding rule, but you can see how quickly those numbers go up as well. So a big part of your overall retirement strategy needs to factor in your Medicare costs as well. But since this is focused primarily on Social Security, if you do have questions about Medicare, certainly reach out. There's a lot of information online. I'll be happy to help provide access to some resources if you need to. But as I mentioned, your overall retirement strategy, and even as we saw on the earlier slide with the piggy bank, there's a lot that goes into your retirement landscape, a lot that factors into your retirement income. And many of these are not just for retirement. Many of these are also to help be able to enjoy life today. But Social Security, as you can see, is a big factor in your overall retirement income. And for most of us, we are planning on and relying on that Social Security to be there. So we have to plan wisely. Now, what is your most valuable asset? Well, many folks look at their house as their most valuable asset, and it truly is a tremendous asset to have. Home ownership is great. We're in the real estate industry as well, so we know firsthand the value that real estate has to increasing your own net worth and being able to provide income, as well as being able to provide that sort of savings ability for the long run. If you take a look at the average home, though, value in the United States, and the numbers go up and down, they vary depending on where you live, your home may be worth, say, $362,700. But for someone that is receiving $2,000 a month, and for a couple that's receiving $2,000 a month until their full retirement age, you can see their Social Security lifetime income is going to be really their most valuable asset, which is why planning is so key. House is great. It's going to be a wonderful addition in the long run, but it would really behoove you to plan properly, to protect as best you can what is going to be very realistically your most valuable asset. And so oftentimes when you're looking at your retirement income, so this is long-term planning, you want to focus on and start with your Social Security. You need to understand the impacts of receiving early, the benefits of receiving late, as well as the impacts of receiving late. There are pros and cons to both. Stay involved with the Social Security Administration, understand what your benefit looks to be, and keep an eye on any adjustments as you continue to pay into Social Security. And then for protecting Social Security, again, evaluating what your options are, making sure you're maximizing the benefit, would be including things like looking at Roth conversions to see if they could benefit you and help protect that Social Security benefit. Identifying a portion, what part of your portfolio really needs to be protected from market losses, what part of your portfolio should be income producing options, and then developing strategies for tax efficient withdrawals, again, with an eye towards protecting your long-term retirement income and your Social Security, which is going to be arguably your largest retirement asset. So many folks lose sight of what their actual retirement landscape can look like. And so just real quick, we have our current spending and time, 20, 30, 40 years or so, we invest into developing our current lifestyle. And when we look to retire, ideally, the best retirement plan will allow you to maintain your lifestyle, not have to make any sacrifices for it. But it takes planning. It takes setting up some goals. You can see the spending might take some adjustments initially, but with proper planning, get your goals in place, start moving money around where it needs to be. Then when you hit retirement, you'll see that your money is able to stay, where it currently is. You're not making any sacrifices in your lifestyle. And then throughout your retirement years, you're looking at your risk management analysis, making any adjustments that you need to, again, in order to be able to maintain that lifestyle. So how I help is, it's a big part of it's education. So a lot of it's, this is just the first beginning, exposing you to some of the information with Social Security. The handbook is over about 700 pages, and it's not a page turner. So there's a lot to it. And as you can see, Social Security is just one piece of your overall retirement puzzle. So education is key, understanding where you are, understanding what your options are, and identifying the strategies that will work best for you, and getting that plan in place is going to be key. And then applying. Learning is great, but you need to actually apply what you've learned, implement the strategies, and monitor the progress, and make your readjustments as needed, as we saw in that progress timeline. The top 6 reasons people meet with me is obtain personal Social Security timing report. That's key for this class. I can help you identify exactly, what you could anticipate given certain scenarios. Your Social Security income to look like, and help you recognize those strategies that might allow you to maximize those. They also will reach out to develop personalized retirement income plan. There's a lot of questions about RMDs and the risk of the higher tax brackets. So is there a real advantage to moving some of that money? I mentioned Roth conversions earlier. Is there some advantage to moving some of that money now while the taxes are where they are, as opposed to relying on these required minimum distributions when they get older and potentially having to pay at a higher tax rate? And so that's what we'll talk, they'll want to find out if Roth conversion would be something that would be beneficial for them, and what effect retirement income decisions will have on their legacy plans for their family. And others may already have an existing retirement income plan, but they don't know if it's accurate, and certainly it may require some updating. So I mentioned the Social Security timing report, which would be immensely beneficial. And this is just a quick snapshot of a piece of it. I think typically the report's about 19 pages, where I'll gather some information from you, and we'll identify the different strategies and help you maximize and be able to see visually what would be the best strategy and best approach for you to take to actually maximize your Social Security benefit. For a retirement income plan, again, this is just a couple of snapshots, but you can see in the chart, the graph on the left, this is just a representation of current allocations of their retirement portfolio, and on the right would be, recommended, what it would look like after making some of the recommended changes. And again, a lot of those changes are also eliminating tax obligations, which will help preserve Social Security income. So this is just a couple examples of reports that can be done for you that really help put you on and plans help put you on the right path. So I offer to you would be to help create a financial plan that's easy to understand, provides great analysis of your specific situation, addresses many of your financial concerns, give you answers to important questions. It can provide a sound strategy for now and into the future. So with that, and Social Security is very complicated. This was kind of a trimmed down version because the other class can drag on. The original version can drag on. There's just too many questions and too many scenarios to go through. So I wanted to focus on highlighting and making sure you're aware of some of the different scenarios that might apply to you. If you have any questions now, feel free to ask. Cindy?
Oh, okay, yeah, and I also asked if the presentation will be sent out, but I really question whether that's really valuable. It's so uniquely personal for each person. I think it's better if they just contact you.
It's tricky. Really talking it through provides the best. I can certainly send out the slides because it might just remind them that there's summaries or really highlights, but it can remind them that there's spousal support, ex-spouse support, things like that, some of the different rules. So I'll be happy to do that. But when and how are very personal. They're very specific to each and every individual and couple. And you can see planning takes time. It may not, yes, doing conversions, doing withdrawals, moving things around, making the decision to, to go ahead and start receiving your Social Security benefit now and or later. They're all things that you just don't want to jump right into. So it takes time. So the earlier you start, I think the more peace of mind you will have and the better your chances will be of truly maximizing everything and being able to reach your goals. So excellent question. So there's no cost for me to take a look at the portfolios. It's a service that's kind of part of it all encompassing. If I find anything that could benefit you that I can help with, then I get paid by those folks. If I don't, if your portfolio is spot on, then you have the confidence knowing your portfolio is where it needs to be. And I would just recommend, annual certainly reviews, especially in case things change over the years. But there's no cost. It's a value-added service. It's a great starting point for everyone to have your portfolio looked at, as well as taking a look at the Social Security timing to see what would work best for you and or your spouse, depending on your situation.
Plus, they have an added bonus. You're a real estate agent and broker. And so you know and understand this business and what their whole kind of scope looks like as far as income goes. So I think that's very helpful too, by the way.
Well, I think it's tremendous. I've always been someone, I do multiple things, and I know, and some people kind of get thrown off by that, but I've always been someone that dives into to solve a specific problem. And as a real estate agent myself, I had the same concerns. What is my retirement going to look like? What is Social Security going to look like for me? How am I going to be able to survive with an income that's unpredictable, with markets that keep changing? What are the best products and services out there? And so I've been able to partner with the right folks. $8 billion a year organization that I work with advisors and security specialists and things like that, that has allowed me to identify what I feel to be the best possible products and solutions and strategies for those of us in the real estate industry. It's scary. You don't know who to trust, and there's a lot of products that just don't apply, but I was determined to find what would work best for me, and what will work best for me as a real estate agent, I know will be able to be applied to my fellow agents, which is why I love giving these classes and making myself available.
Well, I think that the reviews that we've gotten from agents have been extraordinary anyway for you. One last question, and then we can all go. Can a divorce, I think you answered this already, can a divorced person who is not remarried claim spousal support for their ex-spouse who has remarried?
Yes, currently you can. There are a couple of qualifiers. The marriage has to have been at least 10 years, and you have to be divorced at least 2. But my understanding, according to the Social Security Administration rules, is that them marrying has no bearing on the ex-spouse. Them remarrying has no bearing. So a short answer, yes, if your marriage was at least 10 years and you've been divorced at least 2 and you're not remarried.
All right. Well, Gary, thank you so much.
Yeah, thank you very much, Cindy, for putting this together. And thank you, everybody, for attending. I know it's a lot of information, and I wish I could go in more detail, but we all have ADHD, so we try to keep these to under an hour. And I'm always available, and happy to help. So please feel free to reach out, email, call, text. I'll be happy to sit and talk with you. We can even do it virtually, especially with COVID concerns. We can do it virtually or in person, but I'm happy to help.
Well, make sure you follow up with them because this is a different email than what they're used to if they attend your CE classes, and make sure they get this. Okay.
Oh, that's a good point. Yeah, thank you.
All right.
My Call Gary G email is currently not working, but will eventually work at some point. But to keep things cleaner for the financial stuff, yes, if you can use my financial glean email, that'll be great. And I'll reach out to everybody.
All righty. You all have a good day. Thank you so much.
Thanks, everybody.
Okay, bye.
Bye.